Hope the lunch was good, and I hope we won't keep you sleepy because there is beautiful speakers on the panel. And today we're going to discuss basically when everything becomes finally liquid. Over years, we are seeing that tokenization has been solved as a path to the mass adoption, access to the liquid capitals, more efficiency. But when real markets, real users, real use cases enter the room, now we are seeing we're forcing with some issues, we are forcing with some use cases that we never thought. And here is the experts on the different areas from the market to basically share their thoughts on what actually happening right now, what are the issues, and what is next. Here's the structure for the panel. I just want to understand who is in the room, who ever forced with any TradFi assets or even bought one asset in the market. Who knows what DeFi is? Okay, who knows what the CeFi and difference between CeFi and DeFi? Okay, good. Here we go. Guys, please introduce yourself and share one fun fact so audience will be able to talk to you afterwards. Bugra, the floor is yours.
Yes, thank you. Hi everyone, my name is Bugra. I am looking after digital assets at HSBC from global macro perspective. A fun fact about me, I am a magician.
Whoa! I want to talk to you after. Yeah. Gillian, the floor is yours, please.
My name is Gillian. I'm the founder and CEO of Mulana Investment Management. It holds SFC 1459 license, able to handle traditional assets, virtual asset, and security tokens. Fun fact, I think we have a recent case where we were working on a tokenization of a fund, and the asset is based in China. So we were discussing with the client for milestones for payment, and we kind of insisted, as long as the fund is established, we want to receive the second tranche for the payment. They insisted they have to obtain regulatory approval before they want to send the second tranche of the payment. And we thought, the fund setup would be faster than regulatory approval, right? And in the end, they agreed, they catered in, but we kind of got the approval from the SFC within 1 month. And the fund was not yet set up because we're still discussing all the details. And in the same time, in April, China issued a new framework where any assets based in China is subject to Chinese regulatory approval before it can be issued. So we still don't receive our second tranche of payment. That's sad. We can chat about it later.
Great, Stanley.
Yeah, hi everyone. Stanley here. I'm a partner, head of Asia for Hivemind Capital. We are a global investment firm in digital assets. We're headquartered in New York. We have a trading team in London. So we do venture investments, liquid trading, also traditional like stock market. We trade like crypto stocks. We do like DATs. So everything touching digital assets. Yeah, happy to be here today. I guess the fun fact is outside of my main job, I'm also an amateur golfer. I wish to meet more people playing golf in this space.
Very nice. Cleo.
Hi everyone, I'm Cleo from HashKey RWA, and we are a fully licensed company in Hong Kong. And we are HashKey RWA is a tokenization service provider, and we have launched several projects in Hong Kong market. And the fun fact, I think, is everyone knows HashKey Exchange. We are a licensed VATP in Hong Kong market, but actually I'm based in Singapore, and I do the tokenization stuff. So welcome to find me in Singapore, and yeah.
Nice, great. Oh, maybe Token 2049 will be the right place to find you. Cleo, Florian, the floor is yours.
Yes, so I'm Florian. I'm founder and CEO of Evident. We run a digital platform for alternative assets. So we come to the investment side from the traditional assets. The problem that we solve is very simple. For our clients, we allow them to invest into private markets, private equity, infrastructure, private credit, collectibles, and all of these assets are tokenized. So we were the first company in Hong Kong to be licensed for that. Issuance of digital securities, distribution as a broker-dealer, and also running it as a secondary market. We're also a principal investor, so we invest into all of our assets on the platform, and we provide liquidity to our clients. So if a client wants to exit their position, we run a warehouse facility where we are very actively buying and selling in the market. I'm sure we're going to talk about liquidity today as well. what a lot of people don't know about me is that I grew up in the Austrian mountains, and I'm trained as a forester because I basically grew up on my family's land, and my first profession is to be a forester. I look at it as a continuum because looking after a forest is basically looking after a big economic machine and make sure it stays sustainable, and I think investing is very similar.
Great, thanks a lot for sharing. Coming back to the first part of the panel discussion, we're going to discuss basically when everything becomes liquid, we need to start first what actually liquid right now. So having your experience, let's discuss what is actually liquid, what is liquid nowadays, and maybe you can share from the different angles that you are presenting right now. Bugra, would you like to start related to the institutional angle?
Yes, of course. At HSBC, in digital assets, we have both institutional and retail offerings. But when you say liquidity, I can give an example from HSBC Gold Token, which is available in Hong Kong. It's been 2 years since we launched for retail clients. And how it works is that it's a tokenized representation of physical gold, which is held in HSBC's vault. And each token represents 1,000 troy ounce of gold. And this token can be bought from HSBC and sold to HSBC and in 24/7. So all of these benefits, and on top of this, when you buy the token, you see it in your account instantly, and when you sell it, your money is in your account instantly. So when you look at these features of this product, for example, you can easily say that this is a very liquid product for the clients, and at the end, of course, when you give this kind of features to the investors, they appreciate, and right now, in 2 years, I can share some numbers. Our total traded volume is over $2 billion USD with over 250,000 trades, and this is a digital product only available on digital channels. So I think this can be a good example how tokenization can enable superior features and liquidity.
Interesting. Gillian, what would you like to share?
Yeah. I guess more from a fund management perspective, so what was liquid remains liquid, right? We see the most AUM at the moment is in a tokenized money market fund because it's easy to understand, people always need it. But like to talk about liquidity, I want to go back to what you've earlier said. Tokenization itself is not just about the format of asset issuance. It is a whole infrastructure. I think we can think of how email communication is today compared to how to send a physical mail was like in the past. Once you move assets on chain, you have a trading transaction with instant settlement finality. You remove this T+1, T+2 kind of requirements from the whole financial trading cycle. And that means you render the mid-back office from traditional financial system kind of obsolete. And there's a huge efficiency gain, right, of the change in the underlying infrastructure. But the message in the mail, the content, remains pretty much the same no matter how you deliver that message. So likewise with tokenization, the underlying fundamental feature of that asset doesn't suddenly change because it's tokenized. Like if you wrap some illiquid assets into a fund and tokenize it, it doesn't automatically guarantee there is active trading market, but technically it's tradable. But you still need to find your market makers, you still need to create the demand for this illiquid asset. But of course, we cannot dispute that there is a huge amount of efficiency gain in terms of administration, in terms of easier access to this asset. So as more intermediaries and more users get familiar with on-chain trading, we do see that the liquidity will migrate to on-chain rails from traditional rails.
Yeah, Stanley, maybe you also can comment also on the area that you are presenting. So you're head of Asia, and in terms of the fund management, what is actually liquid in the region, or maybe others? Yeah.
Yeah, sure. I think from our perspective, most of our people are coming from like TradFi. For example, I worked in investment banking for 15 years at different bulge bracket firms. My partner, Matt, the founder, he used to run structured product trading for Citi, based in New York. So we have seen increasingly there's a convergence of like traditional capital markets and on-chain economy. Especially, I think there's a lot of initiatives in the US. So like with the launch of like Bitcoin ETH ETFs, we definitely see a lot of institutional capital coming into like crypto asset classes. Last year, we saw there's a lot of like digital asset treasury companies provide. I think for us, definitely we are seeing all the tokenization efforts are providing access to like asset classes that wasn't available to like on-chain investors. So we want to play a role to bridge like the two different worlds. I think especially in Asia, for example, this year we are working with CPIC, China Pacific Insurance Asset Management, which is like a top 3 insurance companies in China, to launch a RWA fund that basically we want to inject high quality Asia-based private credit and private equity kind of assets and bring them on-chain to make them more liquid and more accessible to different types of investors. Also similarly in the US, we are working with NASDAQ private market who facilitates trading of like private listed shares like OpenAI, SpaceX, etc. So we are in discussion with them, hopefully announcing soon a partnership to bring liquidity to more of these US private shares companies. So those are some of the initiatives we are working on.
Great, thanks. Cleo, maybe you also can comment on the HashKey side, on centralized exchange side. What are the most liquid assets on the RWA and basically why it's happening right now?
Yeah, I think when most people first encounter the DLT technology or the token paradigm, they will think it's a good tool or good way to connect them with the traditional asset itself. I want to take the physical gold as an example as well. And we also know when we hold the physical gold, it means we need to deal with the vault, the custodian, and shipping, or it's hard to transaction. But when it changes to a digital version or it's a tokenized gold, we can treat it as we send a message. Sometimes you don't even use the account. You can use the on-chain address to hold the token, and you enjoy the profit from the gold. But when we think of the tokenization solution, that means we are minting a token that represents or that reflects the token itself, its on-chain self. So that means if the off-chain asset, the underlying asset is illiquid itself, we cannot create the liquidity on-chain from nowhere. As the tokenization and is a good tool or it's a path to connect, but we cannot change the asset itself. So if maybe there just lack of the trading demand, we cannot bridge it to nowhere. But I think for tokenization, there may be another reason why people want to hold, how they want to make the investment allocation to maybe get other assets, not just for trading. Yeah, that's what I get from the industry. Yeah.
Thanks, Cleo. Florian, would you like to add something?
Yeah, it's easy to build on that. First of all, I agree on the points mentioned, but also especially the last one. If you take a big step back, what this industry is doing is new, but it's also not new in a lot of ways. So the same rules still apply. Know your client, what they want, right? It starts with that. So if you look at our clients, it's primarily multifamily offices, family offices, high net worth individuals. We work with 3 of the 5 largest private banks in the world, and we simply help them provide access to private equity and other assets to their clients, right? So what do these clients want? The first thing that they want is access. That's still very much the case. Even people who have a lot of money still do not have access to a lot of these assets. So we're not even talking about retail yet. We're talking about accredited investors. A lot of them, except for the very top, are not being served with access. Then right after, we're talking about liquidity. But it's very important, again, to take a step back and say, well, what do we even mean with liquidity? Taxonomy really matters, right? And I hear that a lot. I hear that around from, let's say, the crypto perspective saying, oh, we tokenized it, we listed it, there is no liquidity. Of course not. That's the wrong way of looking at it. I think you alluded to that. these assets are seen very differently by clients. They're not seen as I'm going to trade in and out, right? They are seen as I'm going to rebalance my position, but I don't need crypto level liquidity. So what we do on our platform, when we started 3 years ago and now other players are entering that field as well, is we provide that liquidity. So what does liquidity mean, let's say in private equity? Is a client saying, and there's real examples, when we first invested into SpaceX at $350 billion valuation, the valuations are now beyond $1 trillion. A lot of clients say I want to take some profit and I want to rebalance my position into something else. They're not trading in and out. They're making one trade, and those clients are very happy. If that trade sits there for 3 days, 5 days, they're still very happy because they're moving from a multi-year liquidity window to a multi-day liquidity window. And that's enough. And that is the kind of liquidity that we can already provide. That's a liquidity that's already in the market. Is it on a traditional crypto trading liquidity level? No. Maybe never will be, but also doesn't have to be. I think it's always important to see what do the clients want and what are we talking about when we use words like liquidity. And I think the demand for this type of services is tremendous, and the opportunity is equally large, and clients will look for access and liquidity.
Yeah, thanks. We're slightly moving to the second part, and we already discussed what is liquid right now, and Florian mentioned that basically the question why it's not happening like even previously 2 years ago, what actually changed right now, and why liquidity is moving on chain. There is a regulatory aspects, there is improvements on the technical part, also distribution channels improved. What basically your vision, why it's not happening, and what are the steps that already done that make the on-chain liquidity happen, tokenization happen? Who wants to start about that? Maybe Florian has some opinion on that, or maybe like some overview on the regulatory part.
Yeah, well, so on the regulatory side, first of all, I had the honor to serve on the FinTech Advisory Board of the SFC here in Hong Kong. I say that because I'm biased. The SFC is great, but I think there's a lot of reasons to say that. First of all, Hong Kong was very early into this. If you go back, you can read circulars from 2019, 2021 that I think were very prescient in terms of foreseeing what will happen. Second, the approach of the SFC is to say we're going to accept this as a new asset class, and we're going to allow it, but we want to write tough rules, and we're going to regulate with a very high standard. We're going to build a very high fence. But the companies that qualify, like us, it unlocked for us the entire TradFi market. All those banks, you can imagine, dealing with a large Swiss bank and the head of compliance, and if you're not perfect and perfectly regulated, you have zero chance working with them. And being licensed in Hong Kong allowed us to do that. So for me, the takeaway is it moves at different speeds in different jurisdictions, but there are now plenty of jurisdictions that have clarity, clear rules, the ability to get licensed. And to me, being licensed, I look at it from the flip side, right? Of what it used to be was like avoiding making things a security, avoiding to be licensed. You have to look at it differently. Being licensed is a sales argument in the end, right? It was what would drive actual activity in the future. And to me, we are already in that state. So then you can look at the nuances saying, okay, what's happening in the US? Well, they are catching up. They will move very fast. That's what America is great at, right? Throw a lot of capital at the problem, move very fast. So I think that will further accelerate adoption of blockchain as a system of record, as a new digital market infrastructure in these regulated jurisdictions. So we will see a massive flow of capital on chain. But the last point I will make is, in reality, it will just happen. There will not be a big deal because it's, in the end, just another way of keeping record, right? And so the sooner we stop talking about tokenization and blockchain, that means the industry actually made it, right? Because it moves into the background and you talk about the things that matter. Quality of asset, quality of counterparty, robustness of processes, etc., which was always the case. So I think we're kind of at this inflection point where we're still talking about it, we still have it as title on panels, but probably in 12, 24 months, it will be much more in the background.
Yeah. Bugra, would you like to comment from the banking industry investment?
Sure, I can add to Florian's points. So regulation, yes, definitely there are significant developments, and agree that Hong Kong has been in this very early stages. I am very confident that Hong Kong will maintain its international financial center position and at the same time keep its leading position in the development of digital assets. And when we look at last year, the significant developments in the world, what happened is in US, we have Genius Act, Clarity Act, with very comprehensive coverage, including the tokenization. In Europe, we have MiCA, Markets in Crypto Assets regulation in place and got operational and even started issuing licenses. In Hong Kong, we have now 12 virtual asset trading platforms. We have stable coin ordinance in effect, and the first batch of the applications was completed back in September. And most recently, HKMA has awarded the stablecoin issuer licenses in Hong Kong, and one of them is HSBC. And on the other side, the institutional adoption is growing. When you look at New York Stock Exchange, LSEC, DTCC, all of them announced their tokenized digital settlements platforms. And when we look at all of these developments, it drives the institutional adoption further. And as Florian mentioned, I also expect in the upcoming 2 to 3 years, it will the growth will get accelerated.
So from a funds management perspective, in Hong Kong, if you, as an issuer or broker or funds manager, to issue tokenized shares for primary market, you need SFC approval or no objection. And this past Monday, this week, SFC just issued a new circular about secondary market trading of tokenized product. And what is eligible for now for trading on VATPs is SFC authorized public fund, meaning ETFs or similar product now can be traded on the VATPs, provided if they satisfy certain requirements. And for private funds and other tokenized product, subject to case-by-case approval from the SFC, it's also possible, at least they leave this space, right? They leave the possibility to get approval for secondary market trading. So it is a step, again, a positive step toward the right direction. Maybe the process itself looks like it's quite gradual, but this gradual process also provided the opportunity for fund managers like us to kind of improve the operational capabilities. My initial experience with tokenized fund was back in 2020. At that time, it was very hard to find service providers, no matter it's about smart contract development, auditing, or fund administration. Every service provider will quote a very high price to hedge against the unknown risks that they might be exposed to serve this new asset class. And we spent a lot of time to discuss what those risks might actually be, right? But fast forward to today, each service category, at least we can find, let's say, 2 to 3 quotes, right? We can compare the service that they provide. And collectively, as a whole, we become a bit more knowledgeable and we're better equipped to address any concerns or due diligence from those regulators.
Stanley, would you like to comment something?
Yeah, I guess I can share a bit from like a venture investment perspective. I think Gillian touched on like there are many service providers trying to tackle the technology aspect of the tokenization, be it like smart contract or the. I think just on that, it's not good enough in like this environment, because I think what's more important is whether a startup can source like unique assets, whether they have the ability to say do proper risk management, due diligence, and then have their own kind of strong distribution channels. So it's very hard for like a pure startup to do all of this. What we see like platform gaining tractions are the ones who can have like partnership with like bigger existing giants like HSBC or other like BlackRock, like these kind of firms to really bring like the highest quality assets for tokenization. So I guess when we look at like tokenization as a space for venture investment, like those are, I think the expertise in traditional like finance, understanding these markets, like these products, and the sourcing and risk management, like we will evaluate that as a whole package now.
Thank you, Cleo. And right now I see that there is a big trend happening on the centralized exchange where they're slightly moving on-chain with their self-custody solutions, and with such partners like Ondo Finance, Xtalks, they're bringing tokenized equities basically and allowing the trade basically assets in the self-custody way. What is the main issues on the centralized exchange right now you're forcing with? Whether you see this as an opportunity or actually the issue?
Yeah. As a tokenization service provider, and we can see it's quite more and more clear to how to tokenize it.
Yeah.
So we can see the Hong Kong SSC has just published the circulars like in 2023 and this week, and also in MAS. In Singapore, MAS, and also in US, SEC has already published of what they think about the tokenization securities. So in conclusion, they will think the tokenized securities are securities itself. So we need to follow what securities, how we issue securities to how to issue the tokenized securities. And also, if we want to bring on-chain, I think there may be some barrier, because we all know the on-chain investors or on-chain DeFi users, we can call it DeFi farmers. They may do not like the compliant process. They want to keep the anonymity, and they do not want to do the KYCs. So maybe there is some barrier to get them to invest RWA assets. No, but I think this may, in future, when they want to allocate their investments, it may happen in the future. And secondly, I think for trading and the secondary market or the market maker, they need to get profit from the market itself. So there must be some trading demands from the retailers or other participants. They can get involved. So we can see we actually launched a lot of money market funds first, because the investors, they know how what money market funds from and the risks. They all know that. So I think money fund is the biggest consensus in markets. So every asset management or company or tokenized providers, we tokenize the fund first and then the other assets. Yeah.
Thank you.
I want to add to that. It's not just barriers, right? One thing that when we look at the market is also risk building up in the market because of that.
True.
You see now all sorts of announcements, and we have TradFi experts doing the due diligence. We put our own capital on the line. We look at every asset. So we're curious, how do people do that? And when you look into it, a lot of it is, let's say, worrisome in a nice way. I think we'll see some issues coming up in the system now that a lot of people start to write perpetual contracts without really having the underlying, and allowing just trading without any boundaries. So I think, as we've seen before in this industry, it needs to go through that cycle where you probably have some sort of meltdown, but in the end, it will always revert to mean of quality, like Stanley said, quality of the process and underwriting. So yes, at the moment, it's all getting a little bit, I think, gets on the trajectory where things heat up, and we probably have to come down to then really go into distribution and adoption, and the old rules will still apply, right? As I said, quality of processes.
And it's a good point that we slightly move into the final last round, where I would like you just maybe to pick up one thing that will scale from here, and maybe share your ideal future on when everything becomes liquid. Who wants to start? Bugra, maybe you?
Yeah, sure. Yeah, it's very difficult to predict the future, but I think what's important is to establish a culture in the organization to adapt into any potential market developments, to innovation and everything. But other than that, right now there are more than 1,000 blockchains, and we talk about interoperability, right, these days. I think it will be even more important to if we want to harness the full power of tokenization and digital money, we need all of these components to work together seamlessly. So that's why omni-chain protocols, oracles, and interoperability between different chains and networks will be very important. The technology is there to achieve this. What we need to work out is the legal framework around it, and a network of networks to operate.
Yeah.
I think what skills is always driven by demand. Like Florian earlier mentioned, there is such strong demand for pre-IPO stakes in OpenAI, SpaceX, or Anthropic and the like. We see in private chat, those valuations are like changing almost by the day, and it's structured in SPVs and double layer, triple layer sometimes. So as long as there's strong demand, there's always, it will drive adoption and infrastructure change. Crypto market is always so fast in capitalizing on such trends, and you already can find SpaceX tokens on a dozen of crypto venues, including centralized exchanges and decentralized platforms. But investor has to be mindful. At the moment, the current market structure does not yet allow you to buy the token that give you direct equity ownership. A lot of times it's structured as economic interest or synthetics or derivatives, right? Just trying to give you a return similar to what the underlying asset could generate. And the structure of the token on one crypto exchange is not the same as on the other, so they are not fungible, so liquidity is still fragmented. But in the next 3 to 5 years, I actually see that all equities pre-IPO or post-IPO is going to be issued natively on-chain, on regulated platforms, meaning you will receive a dividend in tokenized version. Your tokenized shares is the same as your brokerage account shares, meaning the liquidity will migrate on-chain because all TradFi is going to upgrade their infrastructure. So that's why those intermediaries that is embracing this change first will be able to benefit from the scaling effect or the liquidity migration, basically based on trends that are driven by demand.
Yeah, I think I see like a very similar trend happening here in Asia as well. Like these large private companies, actually outside of the US, most of these large unicorns are in China. So many of them, I mean, we've been talking to many like large private equity firms who own like some of these large unicorn shares. I think they're all looking for ways to get new liquidity, or like investors want to get access to these companies pre-IPO, right? So I think a lot of these products will hopefully come to the market in the next 2-3 years through different ways of tokenization. Hopefully, I think people are still figuring out like the regulations across different regions, what you can do and cannot do. So, but I think the direction is definitely going there. And I guess also like private credit side, Asia has been like a very large market. For example, these micro lending opportunities in Southeast Asia, like traditionally it's only available to like private credit funds, not really to like retails. So hopefully, like with tokenization, like they can get access to people to these kind of opportunities as well.
Would you like to add?
Yeah, from a product perspective, I think we need to build the on-chain infrastructure, because when we bring everything or bring the whole life cycle the on-chain, and the token trading can leverage the blockchain's efficiency, like clearing or settlement. But for now, most of the products there's two ledgers, off-chain ledger and on-chain ledger. They need to make sure it's every day to be corresponsivity. But I think it's not that efficiency. So when we bring everything on-chain, we can just use the DeFi or other apps, and it may make the tokens be more effective, and that's what we are going to do in the future.
Nice, Florian.
Yeah, so first of all, it's great to hear that you guys also see the potential for private markets, and we all see the same thing, definitely a very strong growth market. What I'm most excited about, what we actually see every day, is that now we're getting to really what we call building capital bridges, where these very dispersed liquidity pools in private markets are connected. How it works today, for anyone in the space will know what I'm talking about. Anyone who wants to invest, if you're a private investor, you're basically breaking your thumbs on WeChat and WhatsApp all day long, texting people in your network. So it's very local and limited. And what tokenization does is what basically happened to e-commerce, right? You lift that all on a digital plane, And then our clients can see, anonymously of course, they can see a seller in Dubai, in Paris, and so you connect together these liquidity pools, and that's a reality already. Of course, this is still at the very beginning of scaling up. But as Bugra said, the infrastructure is there, the technology is very solvable. And so it's more about growth now. One of our investors said, and I'm going to stop here, now the fun starts, right? Now it's about growing this whole thing. The infrastructure has been built, we're licensed, etc. That applies to Evident as our company, but I also see that for the industry. I think a lot of the important things are there. Of course, there will be a lot of details, and we go in cycles up and down a little bit, but the direction of travel is very clear.
Here we go. Thanks a lot for the very fruitful discussion. If you have any questions, I believe you can catch up with speakers using their fan fact. And thanks a lot.